The seventh warning sign that you may have outgrown your advisor is if your portfolio looks the same as it did 5 years ago. I'd have to assume your life has changed over the last 5 years. Maybe you sold a business, maybe you got an inheritance, maybe your goals changed. I can also tell you that the world has changed a lot over the last 5 years. I mean, if you think about it, AI, artificial intelligence, is something everyone's talking about today, yet ChatGPT didn't even come out until November of 2022. That's when AI suddenly became a dinner table conversation. And just think about all the GLP-1s with Ozempic. Ozempic became a household name probably in 2023 or so. And all of those things are impacting the market. And if your portfolio hasn't changed over the course of the last 5 years, you are missing out on thousands, hundreds of thousands, maybe millions of dollars in lost opportunities in your portfolio. Now, here's why this is a major red flag. A static portfolio, something that's not dynamic, something that doesn't change with you, something that doesn't change given things that might be happening across the globe. If you have a static portfolio, you have a stagnant strategy. Your life isn't static. Your strategy shouldn't be static then either. If your portfolio hasn't evolved, your advisor, in my opinion, might be asleep at the wheel, and autopilot is not a strategy for successful people. Now, here's what stale advice looks like. Maybe you're still in a 60-40 portfolio, that cookie cutter portfolio that every financial advisor offers, after major financial changes, despite the fact that most research today says that the 60-40 portfolio is actually no longer optimal. Maybe you've had no serious reallocation conversations with your advisor since, maybe before COVID. And think about that. Maybe you want more in bonds, more in stocks, you want access to alternative investments, whatever it might be. You certainly need to have regular communication with your advisor about reallocating assets. Maybe you've got large unrealized capital gains or maybe even capital losses, and there's no plan to deal with them. Maybe your tax bracket has changed, but there's been no strategy update that actually reflects the fact that you're making more money now or less money now. Maybe some of your money is now coming from Roth IRAs, so that's not taxable income. As your tax bracket changes, you've got to make sure that your financial strategy changes as well. And maybe there's been no update to your withdrawal plan or your asset location plan or your distribution plan. You need to make sure that those things are always being updated on a regular basis. So here's what dynamic wealth management looks like. You should be getting at least a quarterly meeting where your portfolio is being reevaluated to ensure that it's aligned with you and your goals. You should be adjusting your risk exposure based on your cash flow, your goals, your needs, your wants, all of those things. You should be shifting between accumulation, preservation, and income phases. You should be responding to legislation, tax law, and market dynamics, along with geopolitical events that are always popping up. And you should be overhauling portfolios whenever facts change. And they do change. And look, financial advisors aren't responsible for having a crystal ball to identify in advance that those facts are going to change. But when those facts do change, you have to really go back to the drawing board and come up with a new game plan. So just do a quick test. Open up your portfolio statement, and why don't you open one from 3 to 5 years ago? And if it looks 80, 90% the same, that's not active management, that's not discipline, that's not oversight, that is neglect. The world has changed. You've changed. Your advisor seems like they haven't. If your portfolio hasn't evolved with you, it's time for a second opinion. You deserve a dynamic, proactive strategy that actually grows with you. So if you're interested, book a 30-minute Zoom with me. Go to tepperzoom.com. We can chat for 30 minutes and see if it might make sense for a member of our team to do a confidential wealth strategy audit for you to identify some of the things you're doing very well, maybe some of the gaps you have in your situation, and to see if we might have some suggestions for you on how you might be able to close that gap.